All right, so yesterday we learned about our very first permanent financial statement. Yay! Alex, you with me? I know you're writing tense in the middle of a book. That seems pretty exciting. Yesterday was our first permanent financial statement. So far, everything that we have done are not permanent financial statements or things that the business needs to keep on record to go through and prove profit. But there are things that we need to do in order for our business to be operating on a daily basis. So the financial statement we did yesterday was our income statement, and that goes through and shows whether or not our business is profitable or if it has a loss. I will tell you, in our happy accounting land, we will never have a break even. So that means where your income statement would show a balance of 0 at the bottom. We won't have that. It'll either be a profit or it'll be a loss. It's pretty hard for a business to actually get to the point where it actually physically breaks even for your revenue and expenses. Even nonprofits will go through and have either a net income or a net loss because it's hard to balance it out exactly. On their budget sheets or their planning work, they'll try to go through and get to a 0 point, but things happen throughout life. So, for example, when we talk about municipalities are local governments that help us to be able to operate. For example, like the City of Seymour, Town of Black Creek. One of the things that those government agencies need to do is they need to be able to go through and get our roads cleared for us. Now imagine the rain that we've had the last couple days, starting on Sunday, continuing until yesterday. If that would have been snow, how much snow would we have gotten? 35 inches of snow. That's what they would have said. If the weather would have been colder, that would have been beautiful. We would not have had school yesterday or today. They would not have been able to clear it. So, what has to happen for a municipality when you get that much snow? Okay, they have to go out and clear the roads. Would you agree? So clearing roads costs money because they need to go out and do that, and they need to pay oftentimes their employees overtime because their workers normally work their set schedule, but when those things happen, they realize they have to pay overtime. It's really hard for businesses to go through and try to account for things like that when they don't really know what the weather is going to be. There's a lot of unknowns or variables that they cannot control. The other thing that they have to go through and determine like how much salt are they going to buy, salt versus sand. And sometimes they put sand down, sometimes they put salt down depending on the temperature because they know if the temperature is going to drop too much, if it gets too cold, the salts won't work and they have to resort to using sand. So they have to bulk buy all this, and if they get really close at the end of the year, what do they can do? Costing, purchasing. So even our municipalities who try to operate within like breaking even, oftentimes may go over and have a net loss or may have some extra money left over and have a net income for that reason. Okay. First, permanent financial statement. On the very top of our financial statements, we always have the name of the business, the name of the document, and the date. Okay, and the date is always determined by the type of financial statement we're creating. When we go through and create an income statement, we're trying to find out how much money we made for the business. And we don't determine how much money we've made in a business on Monday, and then on Tuesday I go through and determine if I've made money or lost money. That doesn't make sense. Would you agree? Too short a time period. Because all it takes is one really big expense to occur on one day, and then you're going to have a net loss. But is that really representative of the time frame? No. For example, your business has employees. Okay? If your business has employees, you need to pay your employees, right? On the date that you pay your employees, there's going to be a big expense. You're probably not going to have enough revenue coming in on that one day to match that expense. So that's why your income statement is always going to be for a length of time. Shortest period would be a month. Longest period would be a year. The type of financial statement that we're talking about today is the last column on our worksheet, or a balance sheet. Purpose of a balance sheet is to go through and prove that our assets equals liabilities plus owner's equity. And now think about it. Remember the first day, that was one of the first things I taught you about accounting is our accounting equation. Now, when I write the accounting equation, how did I write it on the board? What was on the left side? Assets, and then I did an equal sign, right? Liabilities, owner's equity. I really wrote that left to right. Could I have written it up to down? But I didn't. Why? Carson? Did you give a smart remark or an actual remark?
I don't think it was very smart.
Smart Alec remark? Why did I do that? Why did I write it with assets on the left-hand side and liabilities and owner's equity on the right? Think about it. What do we do from that? Well, that is the accounting equation. What do we do from our accounting equation? What do we learn about next? Debits and credits. What's the definition of debit? Left side of the T account, right? So I wrote the accounting equation that way because I needed to have a left and a right side in order for us to do our debits and credits. So the reason I'm talking about that right now with our balance sheet is there are two sides to our balance sheet. What's going to be on the left side? Assets. What's going to be on the right side? Liabilities and owner's equity. So the financial statement right now for a service business organized as a sole proprietorship is set up just like our accounting equation. There's two sides. On the very bottom, we need to make sure that our left side equals our right side because that is the whole purpose of a balance sheet, is to prove our accounting equation of assets equals liabilities plus owner's equity. Now, when we did our first permanent financial statement yesterday of an income statement, we did our revenue and expenses. We had to first start off, once after we had our heading done, with our first account classification, which was revenue. We wrote the word revenue and followed it by a colon and then listed our revenue accounts. Yesterday we only had one. Is it a possibility of us having more than one? Certainly. Then we put our heading of expenses followed by a colon and then listed all our expenses. Below that we then wrote the word total expenses. I bring that up because we need to follow similar procedures when we do our balance sheet. I have to put my account classification headings on my balance sheet. But instead of them being left aligned, our classifications are going to be centered, so they're going to stand out a little bit more. Okay, so we know on the left-hand side is going to be assets, and on the right-hand side is going to be liabilities and owner's equity. The biggest problem students have in this chapter is owner's equity on a balance sheet. And here's the reason why. You are only listing your capital account. So what, Mrs. Grassel? What else do we have? Drawing, right? What does drawing do to capital? Up or down? Down. Drawing causes our owner's equity to go down. Would you agree? So when I actually have to put my owner's equity on my balance sheet, I have to do math. I know. We can handle it. It's not hard math. Okay? We have to do some adding and we have to do some subtracting. Why would I say adding? What would somebody add to owner's equity? Crickets. I hear crickets. I do hear a fan, a rather large fan too. What would we add to owner's equity? Nope, not liabilities. Just talking about owner's equity in a business, not our accounting equation. What? Not revenue. You're close. I like that track, though. Not sales. Sales is revenue. What did we learn about yesterday? Are we... What's that? Net income or net loss. So what would we add to owner's equity? Your net income. Would you agree? Why is an owner in business? To make money, right? We're not talking about a nonprofit here. The only reason our businesses are in operation is because they are trying to make some money. So when I look at my capital account on my balance sheet right now, I have to calculate my new capital. I cannot just take my capital off of my worksheet, put it on my balance sheet, and get everything to equal. The reason being is I have to account for my net income or net loss. And we're going to be hopeful that our businesses are going to have a net income. You will have an example of a net loss in your assignment, but not on your test. But what we need to do is we have to calculate our capital. We already determined that drawing takes away from our capital. Would you agree? What does net income do to your capital? Increases it. What would a net loss do? Decrease. So if you have a net loss and you have a balance in drawing, you're going to subtract that from your capital account. If you have a net income and you have drawing, one you would add, one you would subtract. So that is the biggest, that's the hardest part of this test, is people can't get their balance sheet to come up because they forget to calculate their new owner's equity. You ready to try this? I don't know if we're awake anymore, though. Should I sing to you? No, I don't think you want me to sing, do you? Yeah? Oh. Alyssa, will you help me sing? No, she says no. Here's our directions for Work Together 7-2. Prepare a partial worksheet of Ken's carpet cleaning for the month ended April 30th of the current year. You can put them in the basket. It's been given below. Also given is a blank form for completing a balance sheet. Your instructor, that's me, is going to guide you to the following example. So it says prepare a balance sheet for April 30th of the current year. So I want to point out one thing. In the near future, very near future, you're going to be given an entire worksheet for you to go through and prepare an income statement and balance sheet. You have to be aware of which columns you use for what. Now, right now, in this specific example, they only gave you the columns of the balance sheet of a worksheet. There's a lot of other stuff that's missing. So when you get to doing it and you're doing like the mastery problems and those where you have to know the whole chapter, you have to be able to pull parts and pieces for the required parts. They break it down a little bit easier for our work together. So, starting at the very top, Ken's carpet cleaning. Name of our document is a balance sheet. Now, the date. We talked about an income statement where you can't determine if you've made money or lost money on a specific day. Balance sheet. Okay, balance sheet is assets equals liabilities plus owner's equity. Is my balance of cash going to be different on April 1st than on April 30th? So can I say this is what my accounting equation was for the whole month of April? No, I can't, because it's going to change. I can say for the whole entire month of April that this is my net income, this is how much money I've made. So a balance sheet is always going to have a specific day. We're saying on this date, this is what my accounting equation equals to. So for this one, instead of saying for month ended, for period ended, for year ended, it's always going to be the last day of the fiscal period, and in this case, it's going to be April 30th. So on the left-hand side is the left-hand side of our accounting equation, which is the word asset, and we're going to have that centered on the left-hand side. I'm going to do one side going all the way down, and then I'm going to complete the right side. So even though when I hit enter, Applia kicks me to the right side, I'm just going to go down the left-hand side. What I need to do is I need to be able to identify all of my assets that are on these accounts here. Assets have what for normal balance? Debit. Does that help you at all? It does. Look at, you have your debits and credit columns there. So you're going to go through and list your asset accounts starting with cash, if I can spell, and then the amount, and then you'll do petty cash, accounts receivable, make sure you choose accounts receivable, Betsy Russell, not payable. After you have all of your assets filled in, you get to use your handy-dandy little calculator and add it up and put your total assets right below where it says total assets. I got 13,513. Does anyone agree? Once you have your total for your assets, you're going to go to the right-hand side. And the right-hand side is liabilities plus owner's equity. So I'm going to start on the top right. I'm going to put in my heading of liabilities. And then I have to list my 2 liability accounts. How can I identify a liability? What does it always say? Accounts payable. The word payable means you owe somebody, and the definition of a liability is anything you owe. So we have 2 accounts payable. We have accounts payable Lindgren Supply, 548, and we have accounts payable Taxes by Thomas for 111. Then I need to add up my total liabilities. So I can see my total liabilities. I hope you can do this without a calculator. Good job, yes. Below liabilities comes my next account heading classification, which is owner's equity. I have 1 owner, so this is really simple. All I have to do right here is write Kentronic Capital. But I cannot, will not, should not take $11,810 and put it there. It will not work. You have to do math. And this is what I talked about at the beginning. So to do my math, 2 things I need to do. I have to take this capital number, which is listed on the balance sheet of my worksheet. I'm going to take $11,810. You already told me drawing decreases my owner's equity. So I'm going to take my owner's equity, $11,810. I'm going to subtract $855. Okay? What do I need to add back in? My net income. I don't have an income statement. How can I find my net income? Where is it? At the bottom of your worksheet. On line 19, it says net income of $1,899. So I'm going to take $11,810. I'm going to subtract $855, which is my drawing, the value of assets that the owner has taken out of the business. And then I'm going to add to it the net income of $1,899. When you do that, I got $12,854. Now here's another common mistake. On my asset side, all I did was add down and put a total, right? So a lot of people are like, oh, on the right-hand side, I'm just going to add down and give me a total. Will not work. Because you already have a total on here. So on the right-hand side, I have to take my total liabilities of $659, and I have to add to it my capital of $12,854. Now, that number needs to equal my assets. What if it doesn't? Somewhere we made a mistake. It could be that our net income is wrong, or it could be that we did some calculations incorrect. Here's another important hint for you. On your balance sheet, the total asset lines needs to be on the same line as total liabilities and owner's equity, which is why there is this empty line right here. You will also notice these columns do not have anything to do in numbers with debit or credit. This is just a column for adding up numbers, and this is a column for adding up numbers. But we need to remember the purpose of a balance sheet is assets equals liabilities plus owner's equity. So if I add $659 to $12,854, what does it equal? $13,513. Then we do our happy accounting dance. Yes! Because our work came out. Because sometimes it can take you lots and lots and lots of time to get this to work out. These two. Total liabilities and your capital. That's what the heading says there. Go ahead and try on your own.